Hey everybody, today I want to discuss a significant development in the global financial landscape. The US dollar's share of global foreign exchange reserves has dropped to a 30-year low. According to recent data, the dollar's share has fallen to 57.4% in the third quarter of 2024. This marks the lowest level since 1994, and it's part of a steady decline we've seen over the past few decades. Just a few years ago, in the fourth quarter of 2020, the dollar's share stood at 59%, which at the time was already a 25-year low. This shift has gained momentum as more countries around the world increasingly look for alternatives to the dollar in their international transactions. Now, why is this happening? Well, from an Austrian economics perspective, the drop in the dollar's dominance reflects the long-term consequences of expansive monetary policies. Central banks, particularly in the US and other countries, have been printing more money to fund fiscal deficits and support various stimulus programs. At the same time, national debt continues to rise, leading to an erosion of confidence in the dollar and its ability to maintain its purchasing power. As a result, central banks around the world have begun diversifying their foreign reserves, moving away from the dollar and adding assets like gold, euro, and the Chinese yuan. For instance, in the last couple of years, central banks have been buying gold at the fastest pace in decades. In fact, 2023 saw the largest annual gold purchases since the 1960s, with central banks buying over 1,000 tons of gold, driven largely by countries like China, Russia, and India. As the dollar's share of reserves shrinks, gold has emerged as a favored store of value, with countries using it to hedge against inflation and currency devaluation. This trend is also becoming evident with the expansion of the BRICS countries. If y'all don't know, this makes up of Brazil, Russia, India, China, and South Africa, and they're adding a lot of new countries. And their efforts is to move away from dollar dependency. The BRICS nations, which now makes up half of the world population and includes countries like Indonesia, and they're actively pursuing initiatives to trade in their own currencies instead of relying on the US dollar. These efforts, part of a broader strategy of de-dollarization, signal that the dollar may no longer retain its status as the dominant global reserve currency in the future. Now, for individual investors, this shift has significant implications. If central banks are diversifying away from the dollar, and if countries are seeking alternatives to dollar-denominated assets, it's critical for you to consider protecting your wealth in the same way. Gold and other precious metals provide a tangible, stable asset that can hold its value in times of currency turmoil, inflation, or geopolitical unrest. Unlike fiat currencies, which can be manipulated by central banks, gold has stood the test of time as a store of value. It's more important than ever to shift your investment strategy to safeguard your financial future. With the global landscape changing rapidly, relying solely on the US dollar or traditional stocks and bonds may expose you to more risk than you realize. Precious metals like gold act as a hedge not only against inflation, but also against the possibility of further currency devaluation. To protect yourself from these uncertainties, consider diversifying your portfolio with gold. Contact Salceda Metal Strategies today to connect with reputable gold dealers who can guide you through the process of securing your assets. Whether you're a seasoned investor or just starting to explore precious metals, we're here to ensure you're aligned with the best strategy for your financial goals. In these uncertain times, gold is more than just an investment. It's an insurance policy against economic volatility. With central banks around the whole world buying up gold and countries seeking alternatives to the dollar, now is the time to act. Stay informed, stay prepared, and take proactive steps to protect your wealth. Please visit my Facebook or give me a call today to learn how gold can fit into your investment strategy and how we can help you build a resilient portfolio for the future.